Trading Sadhguru. So whatever we were discussing after the Muhurat day trading session, it came true. So in that video, we expected Nifty to correct. Okay, we have the reasons we have indicated is the momentum has gone down, and for the 2 days, the closing was around 25,926 and 34 for 2 consecutive days. Okay, and on the Muhurat day, almost closed in the red, and the Nifty futures which were trading earlier at premium traded at discount towards the closure of Muhurat trading. Okay, these were the reasons we gave, and exactly what we predicted. Market mood, but with a surprise. Okay, so what was that surprise? Yeah, here is a 5 minutes time frame chart of Nifty. Let me highlight you. This is the 5 minutes time frame. Okay, so there is a huge gap up, almost 0.7 to 0.8% gap up, and then it appeared that it is going to give up. But within the 20-25 minutes, market again recovered and made high of the day and traded there for almost 120, 140 till here. Okay, around 1 o'clock you can say. So this move was, it is expected that we can only guess what could have gone right or gone wrong. So this probably is an expiry move, because we already discussed that the momentum which is required to take out the previous year's high, that is around 26,200, is not seen in the last two trading sessions. Okay, but this gap up was a surprise, and sustenance till 1 o'clock was also another big surprise. Okay, so but toward the end, around 120, 124, both Nifty and Sensex have given up all the gains which it has made during intraday as well as in the gap up. Okay, whenever there is a huge gap up, if not on the same day, in few days it will come back there and fill the gap and then again move up, even in case of bullish market. Okay, so here it is. This has confirmed our analysis for the last 2 days that, and it even closed below 25,950. Okay, the previous highs which we discussed were 25,926, 25,934. Okay, so this is closure is much below, and all the intraday gains, gap up gains were given up, and Nifty and Sensex closed almost near where they closed on the more trading day. Okay, so the moving average crossover of a shorter period, 5 minute period, this is 9 period and 21 period, turned negative. Okay, so clearly the momentum is lacking, and the momentum on the downside is accelerating. Okay, so what can we expect? What can we expect? You can also have a look at Sensex chart also, because it is expiry today. Let us move to Sensex chart. And if you observe, if you compare both Nifty and Sensex, there was slight variation in terms of percentage movement. So Nifty was moving a little lesser on upside than the Sensex, that is around 0.1%. So why was this anomaly? It is because of the structure of these indices. Sensex consists of around 30 stocks and Nifty around 50. The index is the composition of indices. Okay. So today's movement, the gap up as well as the sustenance for almost half the day is basically caused by IT big weights. So that we'll see in the next window. Here, the same thing with the SENSEX. High is made here, and this is the high 85,290. Okay, and then there came a big downward and almost clear, close near the lows of the day. So intraday movement, if you see from the high to the low, the 1% gap up is given up. So movement between high and low is 1%, both Nifty as well as Sensex. So this is what I want you to have a look at, what has actually happened and why there was a gap up and sustenance. So till 120, you can just go through the charts and the data available publicly. So this is the reason this IT is trading in a positive. TCS was around 3% in the first half. Infi around 4% in the first half. This is around 3%. So the gap up was sustained. Okay, even HDFC Bank at a certain point was up 0.8%. Okay, so HDFC Bank has given up, ICA also given up. Okay, so what can we expect for tomorrow? Okay, for 24th October. So we may expect Sensex to continue this downward momentum. Okay, first testing of 84 350, breach of which the doors for 83,000, 84,350 followed by 84,100. Then the doors for 83,800 will open. So the most likely levels are 350, 84,350, breach of which 84,100 and 83,800 in a day. That 1% movement on the downside is also possible considering how the indices are behaving. Okay. So in a day or 2 days time, you may even expect levels below this. So 83,000, we can have a target of 83,500, 83,400 to 500 at a later date. Okay. Not if not tomorrow, if this momentum continues. If you look at the overall scenario, so how is the Nifty chart that is developing? Yeah, this we have been discussing in the last week and before last week. Yeah, forget about this target. So this can be double top. It's very much possible. Okay, a reversal cannot be ruled out on the downside. Okay, so to which level we may expect Nifty to fall? So considering that our bias for tomorrow, we have a negative bias. We expect market to continue its downward momentum. So we limit our upside view. That is in intraday moment, either gap up or while trading 25,950 on upside. Okay, on the upside. On the downside, 25,800 first, followed by 750 and then 650. This is for tomorrow intraday purposes. Okay, so our bias is negative and the levels which we expect tomorrow are, and on upside we use this level as a stop loss, or even for entering on the downside positions, you we may one may use this reference 25,950. Okay. So when there is a top or bottom is being made, and when there is a trend change, either from positive to negative or negative to positive, don't fight with the market. And the worst thing to do is averaging the positions. So which is not going to solve any purpose, but create a deep hole in the trading capital. Okay. So averaging is not a good thing in these kind of scenarios. So better have a stop loss, fixed stop loss, and if you can execute before entering the trade, if you know where you have to take the loss, where you have to exit, that will help you protect your capital and help you trade for a longer periods of time. Okay, that's all for now. Take care. Bye bye.